Welcome back to Wimas Finance, and if it's your first time here, please remember to subscribe to the channel in order to enjoy the content. In today's video I would like to talk something theoretical, and this is because in the last video I mentioned the word portfolio, and someone asked me a question because he said that he has seen portfolio theory as one of the courses for students who are doing financial engineering, and his question was why do briefcases need a theory? When he asked me this, I was wondering, no, that's not what we talk in finance, because in finance when we are talking portfolios, we are not talking about this, because this is a portfolio where you keep just papers, as French people they call it portefeuille. So you carry papers in it. So we are not talking about this in finance. We are talking investment portfolio. But before talking explaining what a portfolio, investment portfolio is, I would like first of all to start with two words. After those two words, it will be easier for us to understand what a portfolio is, because in portfolio theory, which is a subfield, it's a branch of finance, we try to answer the question, how should we invest our wealth? That is the main question we want to answer. How should we invest our wealth? That is the key point, or the key question in portfolio theory or portfolio management. And before looking at a portfolio, let's have a look on these two words. The first word is an asset. What an asset is. So, asset, we define an asset as a resource you own or you control with the expectation that it will generate future cash flow. Something you control, you own, one of your properties, and you expect that it will bring money into your pocket. So, let's take an example. We have two people here. We have Jean and Paul. So Jean is buying a car, planning to use it as a taxi. So, as you understand, he's going to make a business using that car as a taxi. So that car will bring money into his pocket based on his expectation. So, in that case, that car is an asset. But Paul also, he buys the same car, the same brand, but just to impress his friends. So in that case, Paul's car is not to make money, it's just to impress his friends. Maybe he has used the money from the bank, which means it's not his own money. And every month he's paying taxes, he's buying fuel, he's even paying for the parking. So you understand that his car, that means the Paul's car, is not an asset for him. It's maybe an asset for someone who owns the parking. It's an asset for someone who has a petrol station. So, or maybe if I has borrowed the money from the bank, that car is an asset for the bank because it is making the money to the bank. So that you understand that an asset is anything you own, even your degree, if you can use it to make money, that's an asset. A liability, we will define a liability as an opposite to an asset because it takes money from your pocket, as like the Paul's car, it is going to take the money from his pocket. That's a liability, not an asset. So with those two words, we can see now that we can define a portfolio as a collection of different assets. If you own some assets, so they are making money for you, so you own a portfolio. We can say you are an investor. So let's have a look on this in this example. So here, let's say we have 1,000, let's say maybe 1,000 Swedish krona, 1,000 US dollars, 1,000 pounds, 1,000 francs, whatever you want. But these 1,000, we are going to invest it. So, but we are going to invest these into three different assets. So the first asset, let's say we take 300 of the 1,000, we put in a savings account, which is going to generate some interest. So then we take 200, we invest buying shares in a company, hoping that the value of the shares will grow in the future. So, and then the remaining 500, we start a small business or a big one, depending on the currency we are dealing with. So 500, we start a business, 200 we buy shares, and 300 we put in a savings account. You see that the total is 1,000. That means our portfolio, which is constructed by the three assets, has a total of 1,000. And the three assets, they have different weights. We will talk about weights in a portfolio. Just you see, for example, the savings account has its weight is 0.3. For the business, it's 50%, 0.5. And the sum of all the weights always is equal to 1. So after 1 year, we check our assets, we realize that the savings account has made a profit of 5%, which makes now 315, and the shares we have bought, let's say 10 shares, 20 each, and now each share is 23, and our 10 shares now it's 230. So we made 15% profits. And then for our business, we started with 500. Now when we check what we have, it's 600. So in total we have a portfolio of 1,145. So that means our portfolio has grown 14.5%. So this is a simple example of a portfolio with three assets. So I hope with this example you understand what a portfolio is. You can build your own portfolio depending on your interests, where you want to invest your money. And thank you for your attention, and then I would like to remind you, please, to subscribe and to share to someone you think he is wondering how he can start his or her own portfolio. I wish you good luck, and I wish you love and money. Peace.